Now, the only thing that's really kept the country together has been the economy. We haven't had a recession in 15 years. So I always say the one thing that people fear the most is not having enough money. The biggest fear is economics. And so when the economy, and I actually think that one of the reasons why Q4 this year is going to be so fragmented is because the economy is actually going to be faltering at that point. It's actually going to be, and so you're going to have the political election, and then people are going to be really frustrated. It's like, oh my, it's going to be a double whammy here for America, if you will, is that we have this political problem, we have this economic problem. How are we going to solve it? And I've been saying this, that when we get to January 1st, we're going to look back at 2024 and say, what just happened?
Don, my friend, thanks for coming back on.
Hey, Danny, thanks for having me back.
Yeah, it's been about, 3 months since we last spoke, and a lot of things have happened since then. So let's just dive right in. What is kind of like your overview of the economy, the markets, etc.?
Well, yeah, it's a big question. I mean, I could talk for 20 minutes straight, I think,
The floor is
giving you
yours.
overviews. It's yeah. So we are in. Let's just yeah. I want to. Sometimes I go all the way back to 1960. And go forward, but we're not going to do that. Let's just go back to like 2020. Let's just go back for the last 4 years, if you will. So COVID hit in 2020. Now we had such a mild recession then that I don't even think you could call it a recession. It was it was a blip, right? So we haven't had a recession since 2009. So it's basically been 15 years. And 2009, 2008, I said I was going to go to 2020, but I got to go back a little further. I go 2008, 2009, but I'm going to focus on 2020 forward. So 2008, we had our last recession. And at that time, we had no inflation. Inflation was pretty much dead in 2008. And the Fed at that time, their balance sheet was under $1 trillion. It's interesting. It was basically the same size of our deficit in 1980 when Reagan came in. It was under $1 trillion. And so they had unbelievable flexibility, the Fed at that time. And it took them no time to fix that recession. In June of '09, we were basically back on our feet again. And the Fed, what they did was they had the tools to take rates to zero because we didn't have any inflation. And simultaneously to that, they could print money without creating inflation. Those two tools were very powerful. But that recession created there was a lot of fear. We talked about, they were worried about the financial system melting to the ground. Well, we were so afraid, we bailed out, like we bailed out insurance companies, and we bailed out banks, we printed all this money, we added all this debt, and we actually implemented, in my opinion, MMT, which was created by the Japanese, which is this idea, MMT, modern monetary theory. That's a word that came out of what Japan basically did. And it basically is this idea that it's okay, debt is okay, and you can use debt even if the economy is growing. It's like, don't think of debt in a fearful way. You think of it as a tool. Just expand it. Don't worry about it, kind of thing. And look at Japan's debt. Their debt is GDP is like over 200%. Ours is a little over 100. And so we're not going to worry about that. We're just going to expand. And they didn't get inflation. So we kind of adopted that MMT mentality 2009 and 8, 9, and we haven't really worried about debt since. And if you look at the debt explosion from that time until today, I think it was like under $6 trillion then. Now it's at 35. Right. I mean, debt just absolutely exploded, right? And it was this idea that we don't have to worry about debt. So once they had the mentality, it was really interesting. Janet Yellen said, we're not going to have another recession in my lifetime, or something to that.
Yep.
To that. And the reason why she said that is because of the adoption of MMT. It's like, we know how to stop it now. We just inject money. We learned this from Japan. It's like, no problem. Lower rates. She said this back like in 2016, before we got the inflation explosion in 2022. And so oh, we can just print money, lower rates. Don't worry about recessions. We're good. But what they did was they what we adopted was this idea of manipulation. We're not going to allow. Don't worry about recessions. We got it. We can lower rates, print money, and just hyper uber manipulation. So any company that gets into trouble, don't worry. We'll write them a check. Bank goes bad, write them a check, print money. And so 2020 comes along. Now we're going to start focusing on 2020. 2020 comes along with COVID. The Fed expanded their balance sheet like crazy. It went from 1 trillion to, I forget back then, I think it got up to like 7 trillion. I mean, we're talking some massive amounts of money. That was just on their balance sheet, right? And in tandem with that, the federal government, they were also expanding their money supply, which a lot of that money was actually from foreigners. So they were selling their bonds to foreigners. So that was, additional money, if you will, or other people were buying it. But basically, we were exporting our money, as that's what we've done since 2020. But we got into this expansion of money, MMT, and then from 2020, we solved that problem in 2020 by massive injections of money. Remember all the stimmies? They were just sending out checks to people and just had this massive money supply. And that basically kept the economy liquid, very, very liquid. And you had this Cantillon effect where that initial money goes to Wall Street because they're the ones that actually get the money. They buy the bonds, they issue the bonds. So that Cantillon effect. So you didn't get any inflation in 2021. It didn't arrive until 2022. But all that money kept the economy going and it made everything seem okay. So people had to have this mentality today. So I'm leading up to where we're at right now. And so that gave everybody this sense of confidence that the stock market's going up, but that's all right. Housing prices are going up. So you had asset inflation because of all the money printing, but everybody's kind of happy. We have GDP growth, everything's fine. And then 2022 arrives. Now, again, this is still massive manipulation. It's a big sea change that happened 2008-9 all the way to now. So then in 2022, inflation arrived because of all this massive printing. And then inflation rise. So then the Fed said, uh-oh, we have to raise rates. And they raised rates faster from about 0 all the way to now it's at 5.25, 5.5, 5.25, that's the range, 5.25, 5.5. Faster. I mean, they did it, really, really fast, lickety split style. And when they did that, when they raised rates that fast, it actually created a lot of damage to the economy. In tandem with that, you also had damage to the economy through COVID because people were basically, they were stuck at home, so they couldn't go out. So you had all these small businesses.
And the damage still hasn't been fully felt because we still have the lag effect in play, right?
Yes. The lag effect's being ignored because you always have that lag effect in high rates. That really, and we haven't had, people are talking about soft landing. We're okay, soft landing, no landing kind of mentality. So to back up a little bit, 2022, this inflation kicks into gear and they raise rates really high. So all that damage is being done there. Wall Street is like, no, we're okay. The reason why we're okay is because the Fed are the masters of the universe. They can fix anything. And so right now, there's this idea that if the Fed lowers rates, the economy is going to be fine. GDP today, so you have Wall Street, they really focus on 4 things. And as long as those 4 things are positive, everything's, the economists are like, everything's fine, everything's fine. So the first thing that they focus on is GDP. And GDP is doing all right. I mean, it's about 2%. But the one thing that is kind of a misnomer in that GDP number is we have $2 trillion deficit. And that $2 trillion deficit is actually counted as part of GDP. So if we had a normal deficit of $1 trillion, we'd have no growth right now. So it's kind of a quasi-recession being helped by this huge deficit. So they look at that GDP number and think everything's fine. Then next thing they look at is the employment number. We have 4% unemployment. They look at that number and they think, hey, everything's okay. People are working. We haven't seen any mass layoffs. Nothing to worry about here. But in fact, full time employment has actually been going down for a full year. We've had zero new full time jobs in a full year. All the jobs that have been added have been part time jobs. And a lot of these part time jobs are second jobs.
Yep.
People can't pay their bills. But another one is Native Americans. So if you're an American citizen born here, since 2018, we've had net zero net new jobs. Since 2018, all the new jobs have basically been foreigners. And a lot of those foreign jobs are not high paying jobs. So the economy, it isn't, this super strong economy, right? Then the next thing that they look at is the rate. The Fed is going to lower rates. So if the Fed is going to lower rates, this is good. We're in a good position here. So they're all jazzed up. Oh, we're going to get rate cuts. We're going to get rate cuts, right? The fourth thing that they look at is the stock market itself. They think the stock market is the economy. So as long as the stock market is doing good, everything's fine. So if they look at those four things and they think everything's rosy, we're good. We're good. But they're ignoring the damage that's been done. They're ignoring the manipulation. But wow, absolutely wow, how many data points are negative that they're ignoring? In my next newsletter, I've been collecting some of these negatives, and I actually have 23 negatives that you just don't see on a strong economy, right? And and they even admit. Wall Street even admits that the economy is getting weaker. They admit that the economy is getting weaker. They're admitting that, but they look at these four data points, right? They don't put much traction in that the economy is getting weaker kind of thing. But they do acknowledge it because they have to. Because man, there are a ton of negative data points out there. Look at consumer confidence; it's at 65. That's a recessionary number. 65. If you look,
Delinquencies are starting to
yeah,
run up.
delinquencies of rentals. If you're a landlord and you have like 1,000 rentals, your turnover is ugly. It's a recession. Remember, I said that if you take away that $2 trillion deficit, you're basically in a recession. If you sell cars for a living or you sell houses for a living, you're probably not that happy right now. These high rates are biting people, right?
Mm-hmm.
The average consumer, it feels like a recession to the average consumer. The average consumer, now let's just look at the bottom 50%. The bottom 50% has no savings and they're juggling their budget because the cost of living is not going down. Inflation might be somewhat flat, 2 to 3%, but all those higher prices are still there biting them. And they're having trouble making their payments. That's kind of a recessionary number. So while Wall Street is kind of, oh, we're fine, the economy's fine, underneath, there's like a cancer there. There's like recessionary kind of things going on to a big extent. Another one that it basically is kind of screaming recession is the banks. So the banks have problems. Their balance sheets are ugly because the held to maturity bonds are basically underwater. So the way the rules work in accounting is you can price those as held to maturity. So you don't have to price them as their real value. So they have assets on their balance sheet that are actually worth, they're basically lying. The current value of those bonds is like 30% less than they actually are. So the balance sheets are actually underwater, but they're like, oh, ignore that. We're fine because we're not going to sell them. But if they need to sell them, whoops, they don't have it. It's not there. So there's weakness there. They know it, and so since they know it, it kind of they have to adjust for that for a certain extent. And one of the ways they adjust for it is they lower the risk tolerance. So the risk tolerance is down, and we're not even in a recession. So banks are kind of acting like we're in a recession because they have to kind of lower the risk tolerance. And then their credit cards, where they make a lot of their money, are delinquent. And then autos, a lot of autos are delinquent. So banks are getting hit from a lot of direction in their commercial real estate. So you have balance sheet, you got autos delinquencies, you got home, cars, credit cards, and you have these weaknesses in the banking system. That is not a strong economy. You can't have a banking system that's under pressure, if you will. These are big industries. You got, um, construction, housing, you got autos, and you got banking. These are big, big sectors that are all basically under pressure, and everybody's expecting it to come back to life. Well, where are the green shoots? Can you name a sector where they're adding jobs and everything's fine? When the economy's strong, the places that add jobs are kind of across the board, right? Everybody seems to be, when you're doing well, everybody's doing well. But your manufacturing sector usually is rising. The PMIs right now are negative for manufacturing, negative, sub 50. I think they're about 48. And then services are negative. So there's like I said, where's the green shoots? And all the so they lower rates and then everything's fine. So my overall view is that when you do the cost benefit and you weigh things and you say, okay, you look at what Wall Street's looking at, and then you look at all these data points that are kind of recessionary, if you will, and then you start looking into the future and say where we're heading. Where exactly is this thing going? I'm gonna finish. I'll let you ask a question. Is you mentioned about the delay effect, right? About high inflation rates, high interest rates. Those things bite. They start to bite towards the end. That's why
Yeah, it's
things are
about eight. I
slowing.
think it's about 18 months.
Yeah. All the way down to like 3% overnight. It's going to take.
Hey Don, you cut off for like 10 or 15 seconds. Can you go back, like if you rewind it back all the way to when I said 8, what was it, 18 months?
Yeah, yeah, yeah.
Sorry about that.
Um, it's all right. So yeah, this delay effect. So the Fed cannot cut rates rapidly.
Right.
They raised them rapidly, but they can't cut them rapidly because it would cause too much problems. You got to do it somewhat slowly. So they could probably lower rates, maybe at most, maybe 1% a quarter at most. So it's going to take 6 months, to get it to before we actually start to get help, right? Where it starts to actually help us, at least 6 months. So once things start down, so that so if interest rates are going to be the thing that helps everybody, so it literally is going to take about a year for them to get rates low enough where it actually starts to help us. So this is where the Fed is kind of behind the eight ball, where if things do start to go south, it's really hard for them to get in front of the eight ball. It's really hard for them to stop to get things going better, or it's like U turn of the Titanic kind of thing. It'll take time for them. It's not an instant fix. And that's why I think that things are going to go south here fairly soon. I think the stock market is going to stop going up. It's been going up for like 18 months now. It's going to be 2 years in October. It's more than 18 months. And I think it's going to stop going up soon. And when it stops going up, I think that is going to be the signal of all these negatives basically catching up to the economy. And so your idea of a soft landing, no landing, I think that's going to start to go out the window. And that's when the fear is really going to take off, if you will. We're going to be back in 2008 again.
Wow. So a crash that steep, what would that portend to in today's economy?
Well, what I see unfolding is the same fear level that we had in 2008. However, now we know they have an MMT mentality. So with that MMT mentality, they will inject money and they will lower rates. And so I don't think we're going to get a crash in the stock market because I think there's going to be a lot of confidence in investors thinking the Fed can fix it. So what I see happen is a slow bleed.
Mm-hmm.
So once the stock market stops growing, I think it will take several months of selling. I don't think it's going to crash. I mean, it's basically going to over like 3 to 6 months, like a 3 to 6 months slowly deterioration.
Yeah.
And, and basically it'll be a sell to bounce. So any bounces will get sold. So you start going down. If you get any moves like 3% up, you go 3% up, and people will sell that. They'll sell it, and it'll go down again. It'll slow
Right.
decline.
My God.
So
I mean, I was just
yeah,
gonna say,
so,
my friend Dave Collum, he likes to mention that we haven't really had a real crash in quite a while, meaning that you don't just crash down and just spike back up like you did during COVID, right? We had like a
right.
40% crash and we just spiked right
Yeah,
back up. Like
yeah,
what does that really do if you don't spend time washing
yeah.
away, cleansing the system of all this malinvestment?
Yeah. I think we're heading into um, a very protracted weak economy.
Mm-hmm.
Very protracted, where the Fed basically becomes feckless, so they won't be able to restart the economy because they don't have the tools. Remember, I talked about 2008, how they could
Right.
lower rates to zero and they could print money. So I don't think they're going to have the tools. So what's going to happen, I believe, is the Fed is going to get trapped where they can't restart the economy. And as they keep attempting it, they're basically going to turn Japanese. So in Japan, when they had their bubble burst in 1989, that was their debt bubble popping. Our debt bubble, I think, is going to pop this year. So what's going to happen is Japan in 1990, they started printing money, but they couldn't restart it. It couldn't create growth. They kept trying and trying. So I think that's what we're going to do. They'll inject, $1 trillion, and it won't work. They'll inject $2 trillion, it won't work. But when they're doing that, when they're injecting that $1 and $2 trillion, what's going to happen is the bond market is going to weaken because that injection of money, people are going to basically say, wow, you're just creating inflation. You're weakening the dollar. So it's going to create more bad than good. And that's going to create a doom loop. And the Fed, they're going to realize we're screwed here. We're trapped. We can't print our way out. It's not working. So basically what's going to happen is it won't happen initially. It's going to take, maybe 6 to 12 months of injecting money and realizing it's not working. But what's going to happen is the Treasury and the Fed will get together and they're going to say, what do we do? This isn't working. It's going to be the old Einstein thing. We do the same thing over and over as insanity. It's not going to work. But they're also going to realize that it's actually creating more harm than good. So they'll sit down in a meeting and say, what are our choices? What's the path forward here? And they're going to realize there's only one path. And that path is we have to fix the budget. We have to cut spending. Because if we don't do that, because that big budget of $2 trillion, it's going to grow. It's going to grow because of recessions. So our budget deficit in 2025 will be above 2 trillion. So we're currently borrowing, if you take 2 trillion divided by 12, it's 165 billion a month. So that's going to increase. So they're going to be borrowing 175 to 250 billion dollars every single month. And so when they do that, they're going to realize we can't do this. We can't borrow that much money every single month. That's just going to, basically burn everything to the ground. So they're going to go to Washington and say, you got to fix your budget. You don't have a choice. And so once they do that, it's game over. It's game over. That's when things are going to get really dicey. And that's what I don't know. I think we'd be talking about that about this time, about 12 months, about right now, this time next year. We're actually going to be talking about that doom loop is starting to to become obvious to everybody because the government's going to have this, let's say, $2.5 trillion deficit. And the Fed, simultaneous to that, is going to be needing to bail out companies. So the Fed's balance sheet is just going to be expanding. And when the Fed balance sheet expands, that money goes into the economy because they basically spend it. That's why the balance sheet is expanding. They're basically putting money, they're printing the money, throwing it out into the economy. So that's when you get to stagflation. It's just going to be a total mess. And this is all predicated on my thesis that they won't be able to restart the economy, that they basically turn Japanese and it basically pushing on a string. The lower rates and the injection money is not working. The economy is not coming back. What do we do? Well, let's print more. And then they will. And then, that didn't work. Now what? That's where we're heading. And what everybody's missing is since 2020, the U.S. stock market has been the best performer for 4 years, globally, right?
Yeah.
It's been the one stock market that's done extremely well. Well, guess what? That has attracted foreign money in a huge way. 40% of the stock market is foreign money. 40. So what is that money going to do if the stock market stops rising? So our stock market stops rising, and let's say Asia stock markets actually start rising a little bit. The money's going to move out of our stock market into their stock market or into their economies. If that happens, that's a big problem. You got, $50 trillion, 40% of it. Oh my goodness. You're talking about a lot of trillions of dollars leaving the stock market and heading home. If it's 10%, it's $4 trillion. Something like that.
What
20,
would
that's
kind of
2.5 trillion.
what kind of environment would we need to be in for something like that to happen, though? For money to leave the U.S. markets and go to
A recession. A recession. That's all it will take is a recession. Recession in the stock market's not growing. Like I said, I think that this decrease in the stock market is going to happen over 3 to 6 months. 3 to 6 months, the stock market is going to drop. I think it's going to go all the way down to 3,500 to 3,000. So it's going to be a slow slog. And as that happens, foreign money is going to slowly pull out. I mean, the reason why that stock market is going to be going down is foreign money pulling out.
Yeah, because I've charted the S&P versus the world stock market index, and it's just been going steadily up, like that ratio, meaning that the S&P is outperforming the overall world stock market. So I mean, from a charting perspective, it's just been a straight line up. But
yeah, since April of 2020.
Yeah, well, even before that, I mean, if you look at it from 2008 onwards, it's been
but since April of 2020, that's when the U.S. dominated
mm-hmm.
the global stock markets. Absolute domination, and so all that money's been flowing here.
Yeah. So what does this mean for the price of gold? Gold is been hovering around this $2,400 range now for quite a while. What do all of these events kind of portend to gold? What would gold do in a recessionary environment as well? Would it just fall with everything else?
Yeah, well, this of course is my specialty, gold stock data. I think that gold is leading here. I think gold is leading everything. And what I mean by that is I think the stock market is basically the poser here. It's the fake number. It's like the Buffett indicator. It's 50% overvalued. So if you take, it's about, but I don't think it's going to crash 50%, but I think it's overvalued 50%. I think it's going to crash about 35%. And so gold's the real story here. Gold, it's very unusual for gold and the stock market to both be at all-time highs at the same time.
Right.
Usually gold is inversely correlated to stocks, inversely correlated to the economy.
Mm-hmm.
In other words, gold is usually, people run to gold for uncertainty. Uncertainty means the stocks are having trouble. Stocks are having headwinds. Gold, the last time gold did really well was from 2000 to 2011. It went from $250 to 1935. I'll say that again. $250 to 1935. That was quite a run. Well, the reason why gold made that run was because of uncertainty. We basically, the US economy basically peaked in 2000, in my opinion, when you had the dot-com bubble pop. So you had the dot-com bubble pop in 2000, and then you had 9/11 follow right after. That one-two punch was just created a lot of uncertainty and moved people into gold. And gold outperformed the stock market for a decade. Same thing happened in the 70s, by the way, which resembles now more than that period. But those were the two periods where gold shined. Gold shines when you have uncertainty, economic uncertainty, because it acts as a hedge to that uncertainty. I want a place for insurance. It's insurance against uncertainty. Well, guess what? We haven't had much uncertainty from 2009 until now. You had a little bit of uncertainty in 2020, and you had a run from June of 2020 until August of 2020. You had quite a run there in gold. And that in the stock market wasn't doing as well then. And that's when you had that. That was I called that a fear trade where gold basically ripped. Silver went from $18 to 29 in 3 months. I mean, it's absolutely ripped, but it hasn't done anything since. We're still at 29. We're at the same place it was in August of 2020. The Hui, the gold miners are lower today, 300. They're lower today than they were in August of 2020. So gold now, so gold is the one that's been leading here. Silver and the miners are trying to catch up, but gold's been leading. It's been leading everything, in my opinion. And the reason why is because gold is telling the true story. The true story is, we're basically all those. Remember, I said 23 negative data points. Mm-hmm. That's what gold is tracking. Gold is tracking this underlying cancer that's basically, eating the economy up. And gold is basically saying, I feel that I turned bullish on gold in April of this year. Once gold broke out at 2070, once it broke out at 2070, that was it. Gold basically, I didn't think gold would lead, but when it got above 2070, it basically said, I'm leading here, people. And it has been ever since. Since April, it's been leading. It got above $2,300. It went from 2070 to 2,300. It hasn't looked back. It's basically been above 2,300 since March.
And that's a big move considering the market cap of gold, right? Like your 10 trillion plus market cap. I mean, a 10% move is like $1 trillion in.
Yeah, but what's really significant about that move is it made that move when the dollar was strong. I mean, the dollar's been at 104. Right, yeah. They're inverse. Gold and the dollar are supposed to be inverse. Gold said, "I don't care. I'm going up too," because like I said, it's sniffing out all these problems. So gold, I think the floor in gold is 2,200. If we go below 2,200, I don't think it'll stay there more than a few weeks. So if you have a big stock market sell-off here, I think gold might retest 2,200. It might even not retest it because gold's leading. Gold wants to lead here. And so I've been saying, you really don't have to worry about silver. Silver, I call silver little sis. She's the female energy. You can't understand her, right? The moon. Yeah, you just silver's you can't really control her. But one thing that she does is she does follow Big Brother, which is gold. She just kind of hangs back, lets the little brother say, "Okay, the coast is clear," and then she comes running. And so we don't really have to worry about silver crashing, if you will. We don't have to worry about stocks crashing, I don't think, because as long as gold is leading here, and as long as gold keeps telling us this story. Gold is the uncertainty trade. I feel that gold and Bitcoin are the buy the dip assets. They become the buy the dip assets. And why? They're the two assets that don't have counterparty risk. That's where you can go hide, right? There's very little, if it's in your hands, and they're the liquid assets that don't have counterparty risk. That's the difference. Like those posters on the back of your wall. I mean, they might be a limited edition. They don't have any counterparty risk and you hold them, but they're not as liquid, right? You got to find a buyer. Whereas
Right.
gold and Bitcoin, you could probably sell them today, right? So that's the difference in these assets. There are no counterparty risk with liquidity. And so that's why they're the buy the dip. You can buy them, buy the dip assets. So I think gold should get to, by the end of the year, 2,600 to 2,700. It should. And then it's set up for next year. And it could go a little higher than that. And so silver is the proxy to gold. So silver becomes a monetary metal when you have uncertainty, financial uncertainty. That's the only time it becomes a monetary metal. Other than that, it's a commodity. But it does act as a monetary metal when you get heightened financial uncertainty, which I think we're going to get. And it's starting to percolate. That's why silver's at, got to 32.50 and now it came back down. So I'm not really worried about silver crashing. I mean, maybe it gets to 26, maybe it's to 27, maybe 28 holds, somewhere in there, but I'm not really worried about that because I look at silver only has three levels left of resistance: 30, which has been its nemesis for 4 years, 32.50, which was the recent cycle high, and 35, which is really the last line in the sand before you get an all-time high again. There's three. So if you get to 2,700, actually 2,500, if you get to 2,500 gold, I think we're basically going to retest that 32.50. And so that's a big one. And then if you get to 2,700,
Are you in the market for gold and silver? Then if so, please consider Miles Franklin. They are my gold and silver dealer of choice. So not only do they have super competitive prices that you're going to have a really hard time finding elsewhere, but then they also have top-notch customer support. I know Andy Schechtman, the owner of Miles Franklin, top-notch guy. I wouldn't be recommending them to you if I didn't have faith in their product mode. What you really want to do, however, you want to email them at info@milesfranklin.com, and you want to say that Capital Cosmos sent me in the description line, because when you do that, you can get access to their special pricing sheet. You want to get that special pricing sheet because you're going to get special prices that you won't find on the website itself. So email them at info@milesfranklin.com. Tell them that Capital Cosmos sent you, and you won't be heckled with spam emails, etc. There's no commitment necessary. I promise you that. And with that said, I will let you get back to the video.
actually 2,500. If you get to 2,500 gold, I think we're basically going to retest that 32.50. And so that's a big one. And then if you get to 2,700, I think we basically are going to bust through 35. So those are the two numbers. So basically, $2,500 gold, I think, is the most important number. But, for me as an analyst, I'm always looking, what are the most important numbers?
Right.
So I think $2,500 gold for the precious metal space is the most important number, and that's going to $2,500 gold is going to push the breakout in the miners. So the HUI is about 297 here. 300 is like the beginning of the breakout for the miners, and then 325 is the breakout point, in my opinion. That's kind of confirmation. So if you get to $2,500 gold, then the Hui will get above 325, and then silver will get above 32.50, and you're basically all three metals are breaking out. So 2,500 is just hugely important, hugely important. And the banksters know this, so they defended 2,500 last week. We had an all-time high last week on Tuesday of 24.80. Yeah, and it crashed from 24.80 all the way to 2,400 on Thursday and Friday. Why? They were defending 2,500 because it's so important. I've seen this over and over again, how they defend these levels. And so, they defended 2,000 and now they're defending 2,500. It's crucial. 2,500 is crucial, crucial, crucial. Now, if we get about 2,500 before the stock market crashes, then it basically means gold's going to lead here. And gold could lead. I mean, that's one alternative. The other alternative is we don't get through 2,500 when the selling begins, and we go all the way down and retest 2,200. And hopefully we don't go below 2,200 very far. I don't think we're going back to 2070. I really don't. But we could go below 22, and then it'll bounce. And then once we get through 2,500, it's off to the races. I feel that this breakout at 2,500 in gold will signal a 2 to 3 year bull market in the miners. So we've been waiting 4 years for this, and now I don't know if that's going to happen in Q4, but I'm hoping it does. Um, it's unlikely it happens in Q3 that we get about 2,500 in September. It's possible, unlikely. I think that what's happening here is that in August, I think we're going to see headwinds in the economy. I could be wrong, and that the stock market starts to go down, and that downward pressure in the stock market prevents gold from getting above 2,500 in September, October. So I don't think we're going to get above 2,500 in September, October, although it's possible. I mean, it is definitely a scenario there because gold is leading, but I think we're going to see weakness in the stock market in August, September, which is going to be an omen for all the crisis that's going to begin at the election.
Right. I was
And
going to say that right before the election, just like in 2008.
That's going to be our next topic. We're going to talk about politics, election forward from November. That's going to be, it's unbelievable where we're at here politically in this country.
Yeah. Do you want to open a door to it now, or do you want to do it on our next call?
No, let's do it. I mean,
Yeah, let's go ahead. All right, so let's just dive right in.
This is right.
Yeah, so we've got a TBD nominee on the Democrat side, although it's looking like it's going to be Kamala. We almost had a TBD on the Republican side, but luckily there
Yeah.
was divine intervention or whatever you want to call it occur there.
Half inch.
Yep, exactly. So what do you see happening now, politically speaking, in the U.S.? Depending on whether we have a Democrat president again or we have a Republican president again, does it spell any difference when it comes to the economy, the market, etc.?
Well, I actually wrote a book about the political atmosphere. It's called America's Cold War, Why Neither Party Can Win. So we've been in this political Cold War between parties. It started in 2016. Bernie Sanders basically he let the cat out of the bag. Prior to Bernie Sanders, the Democratic Party was a moderate. They were not far left. They were even close. And if you look at Barack Obama, how he actually managed the economy, I mean, he was basically very similar to Bill Clinton. They're basically moderate Democrats. They were not radical, uber socialist, if you will. Well, Bernie Sanders basically in 2016, he changed that whole dynamic for the Democratic Party and moved to the left.
Forth a democratic socialist movement.
Yeah, absolutely. He's the father of it. He doesn't really get credit for it in many respects. He's been marginalized by the Democratic Party, which is ironic. But Biden, he's definitely moved the party to the left, and there's a lot of members of the party have moved left, and that's created this massive chasm politically in the country, which has created a vacuum. So, but before I go into the vacuum, I want to talk more about this division. So the division has reached a level of it's so massive, if you will, that it's impossible for America to come back together. We cannot come back together, and neither party can lead, if you will, with the chasm. It's impossible. They can try, but it won't work because if the Democrats win, you're going to have the same anger from the red states. It's not. There's going to be there'd be no bringing the country together. And then if Trump wins, if he is the nominee today, I mean things are so crazy. We don't know, right? We won't be surprised at all if they do. There's another assassination attempt. But if Trump wins, the blue states, and the media that anger towards the Republican Party. It's just going to get more vicious, more vitriol. There's going to be no closing of the chasm. The chasm has been created. It's been open. It's not closing. America only has one option left, and that is basically change. And that change literally means basically the eventual breakup of the country. There's no path forward where the country realigns, in my opinion. So I don't know how long it will take for the country to break apart, but we have begun that. We have begun that. And I believe that this election in Q4 will make that very obvious because whoever loses this election is basically they're just I don't know exactly how it will unfold, but each time you have an election like this, you remember the last two, the 2016 and 2020, you remember after the election, the losing side, I mean, it has a massive impact, right? So that's going to happen here as well. It's going to have a massive impact, but in a negative way, more of a pulling apart, a gnashing of the teeth, and total anger, total frustration. And that is going to happen politically in Q4. So America is going to basically totally lose its footing. I don't care who resumes power, but America will kind of lose its footing because they say a family divided, can go live on or
Yeah,
whatever.
yeah. So the author of The Fourth Turning, Neil Howe, he wrote something recently, I think, right, or he said this in an interview. I can't remember which one it was, but he essentially said, you know, historically speaking, like countries, societies, they can only act as such, uh, barring like any major disagreements. Like when we were our strongest is when we pretty much agreed on everything. But if you disagree on how the rule of law should function, or if you disagreed on political philosophy, countries they don't after you reach that point, that chasm, like you said, that's when you start seeing civil wars and conflict of that nature. So I mean, much to your point there.
Right. Right. And things get worse and worse and worse. And so that's kind of where we're at right now. We're at the point where things are getting worse and worse and worse. And that's going to be very obvious. Now, the only thing that's really kept the country together has been the economy. We haven't had a recession in 15 years. So I always say the one thing that people fear the most is not having enough money. The biggest fear is economics. And so when the economy, and I actually think that one of the reasons why Q4 this year is going to be so fragmented is because the economy is actually going to be faltering at that point. It's actually going to be, and so you're going to have the political election, and then people are going to be really frustrated. It's like, oh my, it's going to be kind of a double whammy here for America, if you will, is that we have this political problem, we have this economic problem. How are we going to solve it? And I've been saying this that when we get to January 1st, we're going to look back at 2024 and say, what just happened? And the biggest reason why is because we're going to see politically we're a total mess, but simultaneous to that, economically, we're going to be a total mess because people are going to realize that we've been living off of debt for 30 plus years. Actually, it's 40 years because you can go back to 1980, early 80s. We've been living off of debt for 40 plus years. And we can't do that anymore. If we can't live off of debt, how are we going to get our Social Security? How are we going to get our health care? The government, they need to have those deficits to pay for these things. Our defense. So you have basically health care and defense, Social Security. Those are the three massive payment programs, right? We pay for those by exporting bonds, exporting debt. We have to export our debt. We cannot internally pay for all that. It's too big. Right now we're borrowing 165 billion a month. At a certain point, and so that's what's going to kind of happen. We think that it's fine today because we've always been able to borrow it in the past. It's never been a problem. These bonds have never, we've never had a bond auction that's failed. Well, we get to January this year, we're going to start to worry. Fear is going to explode. And we're going to start to worry about, what is the path forward to America? What is the path forward? Our economic system is faltering. Our political system is faltering. Our inner cities are faltering. What is the path forward? And so 2025 so I call it the end of Easy Street. That's the one thing that we're going to realize on January 1st is Easy Street is coming to an end. And so America since 1945 has been really on an upward, movement. We've led the world. We basically led the world, but now it's become obvious the rest of the world is catching up to us. I mean, they do all of these polls about which are the best countries to live in and stuff like that. America keeps going down, down, down. It's like the signs are there that America, the pinnacle of America, is ending, but people are in denial, thinking we're just going to keep going. We're going to America. This is America. Don't bet against America, kind of thing. Well, and I think in 2025, Easy Street ends, and then I mentioned it earlier. There's going to be a vacuum. So, in the vacuum is the path forward. So you have the Democrat. We have two parties. So you have the Democratic Party. They're basically showing these are the policies that we want to follow to bring America forward, and we all know that that's insanity. That won't work. The further left you go, the worse it gets. The Democratic Party has moved left. As they move left, we've seen the insanity increase. Now, on the right refuses to go to the middle. Basically, since Ronald Reagan got into office, the Republican Party moved off. They moved off of the middle. I mean, you could say that Nixon was basically a moderate, and Reagan moved it further right. I don't know if you say from 0 to 100, Reagan went north of 75. He went further. He's over 75, and Nixon was more like 60. Mm-hmm. And so if you look at it, and so once Reagan went there over 75, the Republican Party has really never. They've never even thought about going back to that 60 level. And that's the reason why the Democrats are so frustrated with the Republicans. Because once you get to 75, it really reduces how you look at America as far as policy goes. It creates, it creates some of the same problems. The further right you go, the more problems you get, kind of thing. So the Republican Party went too far to the right and refuses to go back to the middle. And so, I mean, we talk about the rhinos, right? Republican in name only. That basically means you come with us. The Republican Party moved over here to the right. You're either with us or you're not. You're on the team or you're not on the team. And so those people, those rhinos are basically your Nixon Republicans in the 60s, right? 60, 65, they're loathed, right? They're ostracized. Okay, so the vacuum. So what's happening in America today is that we're creating a political vacuum, and that political vacuum is the path forward. What is the path forward? How do we? And that vacuum is just going to get stronger and stronger and stronger and stronger, and it's basically that is our only path forward. And so what that means is that people that are in the Republican Party or independents or in the Democratic Party, they're going to leave those parties, leave politics, and go and get sucked into the vacuum, sucked into finding a new way forward. And I write about that in my book. The book's called The Path Forward, and The Path Forward explains where we're going as a country, as a civilization. And I write all about how that vacuum is going to absolutely unfold. So change started picking up in 2016, and now it's going to increase in Q4 this year is when it's going to start to increase, and then 2025, 2026, 2027, the next 3 years. You thought change. We had a lot of change from 2016 to now. You wait until the next 3 years. The change is just going to be exponential. It's just going to
it's the quickening.
As people, like I said, as this vacuum starts getting filled, and so that vacuum, that path forward, people are going to start thinking new ways of doing things. It's just going to be,
Are they simply not going to have a choice, or is it just going to be some sort of new form of inspiration?
They're going to realize that the only path forward is change. The Republican Party's not going to fix it. The Democratic Party's not going to fix it. We got to do something different. change. The only path forward is change. That's what people are going to realize, and that's the vacuum. The vacuum is basically saying it's basically a vacuum of change. That's our only choice. We got to do something different. Now, a good example was Hulk Hogan. He basically said, I cannot stay quiet anymore. He got pushed to the edge. His vacuum was to support Trump, but he couldn't remain quiet anymore. He got sucked into that, into Trump mania, right? He got sucked into that. Well, that's what's going to happen. So all these people that are basically, either not voting or independents or even voting, they will say, I can't stay quiet anymore either. I'm going to they'll see these movements that are happening and they'll get sucked into them. The first one I saw, I'll give you one example. I call it the go your own way movement. So there's two types of go your own way. One is people basically just pulling away from society and forming a little community. So there's one in Utah. I heard about this one in Utah. That's one way of going your own way. And that's going to start picking up speed. The other way of going your own way is states. So states will basically say, we don't care about, what Washington's doing. We're going to do it this way. When they do that, in many respects, they are turning their back on politics. So they're actually turning their back on the Republican Party in some respects, because the Republican Party is supposed to be leading us from Washington, right? They're like, no, we don't care about Washington anymore. We're going to solve problems our own way. And when they do that, when they solve their problems their own way, I call it go your own way. When they do that, they don't do it from a Republican or Democratic standpoint. They do it from a standpoint of what's the best solution. In other words, they look at the border, Texas, because I think Texas is going to be one of those states that goes their own way. They're going to look at the border and they're going to go, how do we solve this problem? In other words, they ignore Washington. How do we solve this problem? That's not a Republican solution. That's a common sense human solution. Go your own way solution, if you will. And so basically they start, politics slowly gets marginalized. It gets marginalized. For instance, that community that formed in Utah, I guarantee you they don't care about politics. They don't care. They pulled away. And we don't care. The only thing they care about is food on the table and safety. Politics is irrelevant. That's the vacuum. Politics becomes less important than solving problems. But this all happens on the periphery.
Things become more local.
Yeah, hyper local. That's why I call it hyper localization. People start growing their own food. And this all happens on the fringe. It all happens on the margin. The go your own way movement will start really, really small, like on the border. I think like Alaska is a good example. Go your own way. I think Alaska will kick the EPA out of their state because the EPA won't let them build the Pebble mine. Well, the Pebble mine will employ like 5,000 people. That's a lot of employees for Alaska.
Yeah. So if we
tied 30-year mine, they're going to tell the EPA, get out of the state. We don't want you anymore.
Right.
So that's go your own way movement.
Yeah. So with globalization, you saw massive disinflation that comes with it. With something like localism or decentralization, does that also imply the opposite? In which case it would be inflationary.
No, because the reason why is because people will start sharing more. And when you share, that creates deflation because you could have three families sharing the same washer and dryer. Right? When you start sharing stuff, it goes a lot further. You could have three families sharing the same two cars. I'm just giving one example. Right. That's deflation. You could have one family, they share stuff. So we're going to start seeing more and more sharing. You could have a block. You could have a whole block basically growing their own food, one block having their own garden. That's going to be deflationary because you're growing your own food, which is a lot cheaper. So and like that, I think localization is actually deflationary.
Yeah. So what I've been doing lately, Don, is I've been opening the floor to my guest to ask a question to my next guest. And I just got done interviewing Art Berman before you, and he had a question for you. And I think this kind of fits into to what we're talking about here. And he wants to know.
I'd like you to put the sacred cow of um, technology and human ingenuity into context for me. Quantify them.
Yeah, this is a good question, and I've actually thought about this, and I actually believe that the future, the future of economics is not materialism, is not growth. It's basically just sustainability and simplicity. So it's a combination of sustainability and simplicity. So you'll have communities that aren't interested in growth, in basically more money, right? 5% annual increase. I actually believe that that's all predicated on the banking system we have today. Because the way the banking system works, you actually have to expand the money supply to pay back the debt. So it's all interest focused, right? I actually think the way that they actually set it up in the past, where you didn't have usury, we didn't have inflation, actually made more sense economically. But we've America has basically, I mean, you go back to the 18th, 19th centuries, we're always based on this idea of materialism, wealth, get a ranch, get a big ranch, get
Yeah,
lots of
but
money.
especially now, did you see that survey they did about a year ago where they track American values over time, over like the last 30 years or so, and money has just skyrocketed,
Yes,
especially over the last 2 or 3 years.
yes,
Patriotism has gone down, religion has gone down, family values have gone
yes.
down.
Yes, it is so expensive to live. I said it earlier today. The only thing Americans are afraid of is not having enough money. It's insane. So that is going to drive the vacuum. So it's like people want financial security. So, well, one place you can get financial security is basically sharing, living in a community, and simplicity. So that's what's going to happen. And so the future of economics is not growth. The future of economics is sustainability of a community. And you can sustain yourself. I mean, the Native Americans are a perfect example, right? They sustained themselves for thousands of years living a simple life. So you can live sustainably through simplicity. And that doesn't mean that we have to bypass technology. We can still have technology. It just means that you can still live simply with technology. It doesn't mean that technology has to go bye-bye, if you will. I'm a big believer that the internet is not going away. That the internet is going to be a very integral part of how we live our lives. I believe that. So technology is not going away, but perhaps the way that we use our phones, everybody basically has a phone and we're dependent on our phone. Perhaps that gets derailed quite a bit. If you're living in a community, maybe you don't need to have that phone 24/7. That might go away, like say in 10 years from now. But the rest is decade. But I
No, I
don't
mean,
think technology
there's definitely a yearning. Like I don't know about how your YouTube feed looks like, but like I keep getting recommended like these camping videos and these DIY videos and outdoor videos, and I see how many views they get. They get millions of views, millions of subscribers. So there's definitely like a yearning to go back to something basic, go back to and reestablish a connection with nature. So I see what you're saying there. Like there's a hunger out there for this.
right. Well, the I haven't even brought this one up, but I guess I have to. So the the big change in humanity going forward is a spiritual awakening. And the big spiritual awakening that's coming is this idea that we're connected to one another. And so once that occurs, the next step after that is the connection to nature. And so you get that connection to nature, more people are going to want to be in nature. But the step one before people really start, getting really, you know, more aligned with nature, it is the connection to one another, which is coming, which is the spiritual awakening, which I believe is going to begin this decade. And so this connection where we start to feel a strong connection to one another. And that's, I don't want to go into it too deeply, if you will, but um, that is what is going to lead to this simplicity thing, because we're going to want to help each other. We're going to want to live with each other. We want to share with each other, communal, more communal, if you will. The age of Aquarius is actually brotherhood. And that's what we're going into right now. We're ending the age of Pisces and we're going into age of Aquarius, which is brotherhood. Man, brotherhood is more community focused, more humanity focused. So you're going to see, like right now, we're very individual focused. A lot of people don't even know their neighbors. It's very common, right? You don't even know your neighbors. You don't even know their names. Well, that is the shift. We're actually going to shift more into more of a communal humanity type of situation. And it's going to be done for a number of reasons. One is actually been done out of need. There's basically not going to be, as the economy weakens, like the homeless problem, right? That's going to get worse. And it's like, how do we solve this problem? Well, one way to do it, is the communal. One thing that blows my mind, nobody's done yet. Nobody's created a homeless community where these people basically, can live, if you will. Instead of living on the streets, why don't you go give them an area to live in, where
Right.
it's more communal, and then they
Yeah.
start
With
sharing
communal
stuff.
bathrooms,
Yeah, share stuff, right?
taxpayer paid meals.
Eat
Doesn't have
together.
to be like lobster meals or anything, but just something that they can eat. Yeah.
Yes. Why? How come we haven't even seen a single one of those yet? I think it's going to happen. I mean, a perfect place to do it is like in the desert. I mean, Arizona. I mean, there's nobody there. The deserts are empty, right? They're completely empty. Why can't you go build a little communal place and then send all the homeless people there? Like, oh, no, I don't want to go live there. Well, hey, if you, it's safe. There's security there. There's food. There's water. You know, but I don't know why we don't have those, but that's communal living. And I think that's what's going to happen. We're going to see a lot of communal living by the end of this decade.
Hmm.
And it'll be out of need, one, but then people will like it because they give them a sense of safety, a sense of security, a sense of community.
But what about the I guess the moral hazard of the incentives that it creates? Doesn't it create? I'm just thinking about the other side of the argument. People will say, well, this creates an incentive to not get a job, not work, because now you're being taken care of in this communal community.
Well, trust me, that there will definitely be different levels where um, some communities will actually have basically more love, if you will, more, where people feel happy. These initial ones, these initial communities, like a homeless community, if you will, it's not really going to be a place of a nirvana, not even close, right? Because a lot of people there's going to be a lot of people there
Yeah,
that
this
are
is gonna be
there.
bare minimum basics.
Well, a lot of people are going to be, a lot of them are going to have, mental issues, if you will. They're going to be challenged. It's not going to be a super fun place to be. Whereas these other communities, and so
Right.
you're going to go there because you don't have a choice, kind of thing. But it's not going to be great. But the other communities that I'm talking about, the ones that people are going to build, are going to be very Nirvana like, where people are very happy.
Hmm.
But I still think communal living is better than living on the streets, if you will. I don't see it so much as moral hazard. Um, um, I really can't wrap my head around the fact that there's not one that exists in
Yeah.
America. I can't wrap my head on the reason why. It almost feels like it's a conspiracy that people don't want. If they do that, it exposes the underlying problems that are actually there, or something, and that they have to actually fix some of the underlying problems. I really can't wrap my head around it, but it makes no sense to me that there's zero exist.
Yeah. Well, you might just be ahead of your time, Don. So
Well,
yeah.
possible. I do consider myself a visionary.
Yeah. So if there's a question you could ask my next guest, what would it be? Peter Grandich.
Oh wow. Oh. Um. All right. So here's the question: does he feel that copper demand can increase substantially if the US is in recession for the next 3 to 5 years.
Okay. Sounds good. Another thing I want to ask
That's
you, Don, is
that's my concern. That's the reason I don't own any copper projects. I don't see copper demand going up in the next 3 to 5 years. I think it'll go up a little bit, but I don't think it's going to go up very much. Not if the U.S. is in recession for the next 3 to 5 years.
yeah, the copper to gold ratio has actually been doing some interesting things. Typically, it traces the 10-year yield, but it's actually decoupled from that. The 10-year yield's just gone up, and copper to gold just kind of been moving sideways.
I think copper prices will go up with basically inflation. I think copper will go to $5 to $8, $6 to $8, but I don't think demand will go up. So the only people that are going to really benefit are existing miners. So all these development projects are going to have trouble. That's my take. So
Gotcha.
go
And,
ahead.
and if there's any books that you'd recommend the audience look into, what would they be?
Yeah. So yeah, if you're interested in my ideas of the future, read my book. It's called The Path Forward. It's on Amazon. That would be one. And then the one author, if you're interested in the spiritual revolution that's coming, the spiritual awakening, the one guy that I recommend is Paul Selig, 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 Paul Selig. Any of his books, they're eye openers. So yeah, thanks for that.
Yeah, for sure. Well, if you guys enjoyed this show, be sure to write "Go Don Go" in the comments. Don, any other parting thoughts before we sign off? Where can people find you?
Well, of course, my website and then Twitter, Don Durrett, Twitter. So, yeah, parting thought is that I don't know when this stock market is going to top out. It could be, it could have already topped out, right? We might not get it high. It could be August, September, October, November. I don't know when it's going to top out. But my feeling is that when it does top out, here comes the recession, baby.
Yeah. Well, like I said, guys, if you enjoyed this content, type "Go Don Go" in the comments. Like the video, subscribe to the channel if you haven't already. Do me a big favor if you do so. And yeah, with that said, I'll see you in the next episode. Bye, y'all.